Hi, this is Connie from Prosperity Finance. Thank you for watching our video. Well, in this video, I'm going to use a case study to discuss why loan structure is so important. We recently have a client who is actually a finance manager in a big company. Well, it's kind of a dream client for us because we love to have a straightforward application. Well, in this case, with her income level, she's easy to get a refinance or restructure loan approved. What we did for the client is not just get the calculation done, but we also look at the whole structure and find out what happened, what the issues are in the current structure. So client is actually on her own. She has a really good income. Well, she banked with two banks. One bank has a mortgage with a revolving facility, and she hardly used. And the other bank, she has her family home in the trust as well as another rental property, and they have a big loan in that bank, and they fix the whole lot with one fixed term. So after reviewing, I give her recommendation in the following area. Firstly, the family trust is actually can be discharged. Now, when the rental property was sold from the family trust initially to the LTC, there was a deed of debt agreement. So the trust can actually call the debt and clear the debt and mortgage free, so that the family home is safe. Now, between the two rental property, they are all under the same entity, which is the LTC. Now, ideally, we should separate the two, so there's no one bank has full control over both property. Now, after reviewing, we find out there is a property is actually has much higher value. So we max out the loan against that property and make that interest only, so that the other bank will have a minimum loan amount, and the client can start paying principal and interest, so that loan can be paid off as quick as they can. And also, if they need to use equity to buy another property later on, that's the opportunity. So when we choose the lender for the big loan, we'll look at in the long term if this bank is competitive in terms of rates. And for the smaller loan, we'll look at what's the product feature available there, and what's the future borrowing capacity from that bank should the client looking to buy another property. So we look at the both, and we come up with a plan. And with the smaller loan, that bank actually have a product feature that the client can offset the loan against their relatives' deposit, so that she can pay off even quicker and save a lot of interest. So in the end, client so happy, and she was quite surprised that how much we could do for her. So this is a classic example that the loan structure is very important. And every client that work with us, we not just calculate the loan amount, but before we make a submission to the bank, we actually have a meeting with them. And after the file review, we actually give them a recommendation on the lender option, the repayment plan, the product feature, and also any other plan long-term that we can support when we submit the current application. And we not just give the advice only, we also tell them the reason behind it, so they can make a really informed decision. So I hope you find this video useful, and if you like us to help you just to look at if your loan structure and repayment plan are still meeting your needs, feel free to contact us, and we're more than happy to help. Thanks for watching. I'll see you next time. Bye bye.